Motherson Sumi reported a mixed set of numbers. Let's cut across as Vivek Chand Sehgal speaks to my colleague Yatin Mota.
I think it's almost similar. You know, revenues within India are up 12%, outside India are 11%. We're about 92% or something like that outside India. So really the growth is almost similar all over the world. We are very, very happy with the way our customers are performing, and with the result we are doing even better and better.
And sir, talking about the standalone business, we have seen an 8% revenue growth for the standalone entity. However, this time, if I look at your investor presentation, the absolute EBITDA was down on a year-on-year basis. So, what led to this compression of operating performance? Is it because of higher raw material costs, or in general the costs were higher for the standalone operations?
Absolutely. I think there is a lag of, the copper and dollar and all these particular things have an impact on the standalone portion, and you have 3 months kind of a lag that's happening over there. We are sure that within the next 1 or 2 months, 3 months, or max at the end of the year, all our customers would have settled up the whole thing, and the numbers would look much better at that time.
Okay. Okay. So talking about PKC, and this time, you have also included 2 months performance of Riddle, your later acquisition, in terms of the accounting. How do you really see, the operating performance of PKC from here on? How has really Motherson Sumi digested or integrated this new acquisition of Riddle?
Well, I think if you look at it, PKC has done... its revenue growth is about 12%. Its growth in EBITDA is 33%, which is very much in line with what we are looking at PKC to do. We are taking out all the low-hanging fruits, and now the medium range fruits are now in target area. So I think there is going to be a phenomenal improvement in ROCE in PKC in the coming years, which is going to be exactly to what we wanted. We are patient with the new companies, because ROCE is all about attitudinal change. You have to change the attitude of the people, make them think differently. And in that particular thing, we want to be sure rather than be in a hurry. So we are very pleased with how MWSI, PKC, all the companies which are there in the group, how they do it. You look at SMR as well. I think SMR and the standalone business have reported a very robust financial results. Even though in SMR the growth has only been 1%, but the EBITDA has grown by 5%, which is fantastic. And this is after giving the discounts and all that, Okay. So I think overall the group is doing very, very well. Our order book has now gone up from 129,000 crores to almost about 165,000 crores. So, this is just at the SMRP BV level. So we are very happy that, the customers' confidence on Motherson is growing more and more.
Okay. I was coming to that point regarding the order book, and you reported a very strong set of fresh orders for the quarter gone by. My question to you, Mr. Sehgal, is that how is really the auto market shaping up? Is there more demand in the smaller passenger car vehicle segment, or the luxury car market is equally doing well in terms of order intakes which are coming in from OEMs for you?
So I think, this particular thing is what we have been trying to explain time and again. The car makers are really trying to come up with new ideas which the customers want. Okay. This is all about the interiors, the exteriors, the facilities, the features that the car is given. So that leads to very fast changeover of models, model upgrades and things like that, which is excellent business for Motherson. So we are, if you think about it, 6 months ago when we had given you about 129,000 crores, we've removed 21,000 crores from that and added another 40,500 crores as new orders. So this is clearly vindicating what we have been trying to say, that the car makers are wanting to come up with newer and newer models and newer this thing to offer to their customers. So we don't see any reason why people should be very worried about automotive industry in the world.
And sir, talking about S&P, you said that the revenue growth was 1%. But when I look at S&P, the revenue growth was 4%. However, we saw a decline in the EBITDA. Of course, there are startup costs which have clearly impacted the performance. But even if you adjust for that, what was the key reason for decline in profitability? Was it only the raw material costs which have been increasing?
No, I think in I was talking about SMR.
Yeah.
That's the mirror company.
Yeah.
That has grown
S&P.
1%, but the EBITDA has grown 5%.
And S&P has grown 4%.
is the interiors and exterior business of Motherson. Yeah, that has grown 4%. But what I'm trying to explain to you is this is probably one of the last quarters where, the current quarter where we are at the moment, November till December, probably would be the last quarter where there would be some kind of an startup cost and all that, because we are now filling up the order book of what the customer is asking us to do. But from January, the whole cars will be launched and everything, and then you will see the real impact of what we are talking about, when you're talking full production, and then the full costs of the factory are also getting absorbed in that. So that is the thing which happens till the launch happens. We are sure that in January the numbers and everything will start to look up much better, because the full, almost full sales will also start to show up. This particular quarter we have already removed Cash Commit, because we've started small billings over there. And next quarter, I think you will see the Tuscaloosa also being removed, so hardly any new startup costs will be there. So you will see the full impact and the profitability of S&P coming up in front of you.
Okay, good to know that, Mr. Sehgal. And one final question on your ongoing expansion plans. I was reading a various and a variety of analyst reports, and most of them were quite gung-ho on the expansion plan and the kind of execution Motherson Sumi has done. So if you could just appraise us on how really are the expansion plans and new factories shaping up, and are you on track in terms of starting production in those new facilities? And if you could just update us on the new Mexican facility and the American facility, and how exactly are things shaping up there in terms of execution and the launch of production?
Yeah, I think last quarter we had already put in front in public domain that in the last 3 years, Motherson has set up 21 new manufacturing plants. That tells you as to what kind of growth that Motherson has got. 21 different manufacturing plants. I think people struggle to put 1 or 2 plants. We have done 21 of them. But we have done so at a profitable way. The global profitability of Motherson, because the only share that's available for people to buy is Motherson Sumi. That has shown growth in the top line, has shown growth in the bottom line, and yet 21 new plants have been come up. Tlaltepec, the Mexican plant, is doing very well. It's already now, nobody wants to talk about NAFTA anymore, or the new American, Mexican, Canadian thing. Yeah. So that particular thing is starting its journey in a very, very good way. Kecskemét is a Hungarian plant that has also started off very well. Tuscaloosa is the last plant, which is a massive plant, which itself will do about $450 million worth of contribution to the group. That will be fully operational from the January quarter. So I think we are almost at the end of the pain of Motherson for the growth on the new plants and things like that. So really looking forward to all our teams and for them to show you how good they are in their performance.